Welcome back. So, Algonquin, AQN, it has cut the dividend. How much? What does this mean? Let's have a very quick look at the investor call and some of the implications of this now. So look, they've taken some steps, realigning capital allocation, reducing capital expenditures, refocusing the portfolio and reducing the dividend for sustainable long-term growth. Now, this isn't necessarily sustainable long-term dividend growth, but the actual growth of the company itself. So they are absolutely committed to the Kentucky Power acquisition. It's a little bit unfortunate. I know they are contractually obligated to continue with the Kentucky Power acquisition, but I think from what I was reading from the requirements around pricing, I'm not quite sure this is going to stack up to be the absolute deal that they were hoping for, being in the heavily regulated sector. Now, as well as this, I'm beginning to wonder if they will need to sell the Atlantica Sustainability company or stake that they've got in the company. That would free up a huge amount of capital. It would also sort of signal quite a strong shift for the company as well, away from the renewable segment back to the regulated segment. Now that would also sort of fit with this idea around their capital allocation and refocusing the portfolio away from perhaps renewables and away from that growth that they've pursued in the past, focusing instead on the steady eddy regulated sector. Okay, so what's going on here? So look, they're really committed to their credit rating. It's not the highest credit rating, but it's reasonably solid. Now, of course, if they were financially struggling and stretched too thin, their credit rating would take a hit into territory where I'm quite sure they do not want to be. Now, of course, I think the management over the last 8 years has been doing a very, very delicate balancing act, using leverage and borrowings to fund growth and to fund acquisitions. And like many things with leverage, it goes well when it goes well. But boy, oh boy, as we saw, when things get a little bit sticky, high leverage does cause challenges for management, which is exactly what we saw. Quarterly dividend. So we've lost about 4/10 of the dividend there. Well, we saw the dividend cut coming, to be fair. I was actually suspecting it could even be higher than that, as much as perhaps even halving the dividend entirely. In my mind, that would also provide a huge buffer, and I wouldn't personally mind a drop in the dividend of a higher amount, knowing or being aware that the intention would be for this to be a temporary dip in the dividend, and then over time I'd hope to see that they start growing this. And again, I'd hope that this dividend will continue to grow, but absolutely here, looking for a sustainable dividend that will continue to grow. So not necessarily just a steady dividend, but hopefully one that now will continue to grow. The Kentucky, so I think we're going to see that continuing. I'm not 100% confident that I like this. I think if I could, I'd love to see them be able to drop this entirely. I'm not 100% sure that's going to be unlocking the value that we want to see as shareholders. Asset sales. So it's difficult to see this. So proceeds for the next phase of the renewable asset recycling and additional asset sales. I think that exceeds the a little bit lower than the full stake in Atlantica. It could be that they sell a portion of the stake. This is, of course, I mean, it makes a lot of sense. If I was under financial stress in our private household, of course, asset sales make sense, but I think we're caught now in a situation where they're selling the assets at the wrong point in the cycle. If you want to sell assets, you want buyers that are going to pay a good price for the asset. And I don't think we have that today. I do not think that we've got a market now where they can actually sell the assets and find a good return for them, with buyers with deep pockets willing to pay for them. I just feel that this is done in completely the wrong time. The time to do this would have been a while back, perhaps a year, and that's when they should have been selling down some of the assets. They should have been deleveraging when times were good, not when times were bad. If you think about this, you know, if you're in the middle of a housing downturn and you have an investment property, all of a sudden those prices are crashing, you need to release some equity. Selling the house at that point in the downturn is totally an atrocious time to do it, and I think AQN is going to have the same struggle here. Okay, so they're suspending the dividend reinvestment plan. Okay, so it does something. So you've got to receive your cash dividends. You cannot just plow it back into more shares now. So it's going to reduce shareholder or share dilution. But it's going to be, I think, it's just sort of moving the deck chairs on the Titanic sort of thing. It's not really going to push the needle either way. I'm not convinced that that's a huge move, but I guess it makes some sense there. And quite a substantial change here in terms of their guidance downwards to 55 cents to 61 cents of operating earnings per common share. So that's in a nutshell what's going on here. Now, just to give us some sense of what might occur here, for 2027, I've plugged in an earnings estimate of 60 cents per share, so expecting a reasonably conservative growth over the time there, and even a 50 cent per share dividend at that point in time. Now, this is the number's a little bit wonky because I haven't changed the past dividends, and it's counting those here, but we're talking about a total annualized rate of return, probably I would say of 10 to 11%. So if you're thinking about the current price for AQN, we're thinking about the renewed or severely reduced guidance. We're talking about the dividend cut here. I think this has been a good move for the company. I think it's now roughly fairly priced, returning perhaps reasonable market returns now, more in line with a regulated utility perhaps. So look, I think the company right now is probably roughly fairly valued given the guidance that they've just issued and the plan that they've outlined. I think they're going to be selling assets out of the renewables part of their portfolio, simply because this is very much the non-core part. Their core part of the business and regulated utilities are still sort of, an order of magnitude greater than the renewables part of the portfolio. So I would see them as more inclined to sell off some of the renewables to fund Kentucky and to shore up the balance sheet and shore up their capital that they have available and cash on hand. My guess would be Atlantica. I think that is a beautiful piece of business that they do own in their portfolio, and I suspect that there'll be other companies that'll be quite happy to take that off their hands, or taking advantage, unfortunately, of the AQN at this point. And I think as they do that, they're refocusing the portfolio, planning to reduce capital expenditures, improve the capital allocation, and ready them for long-term growth. So I think AQN now fairly valued. I think these are the right moves. I suspect, or I was actually suspecting, that we could have seen an even bigger dividend cut, but I'm happy with this as a shareholder. So fairly valued. Am I going to pick up more shares at this price? No, I'm not. I'm going to be leaving this and moving on to some other investment opportunities. Stay tuned to the channel though to learn what those are.